the Aroon indicator can be used to identify various stages of a trend's development and get an idea of the strength of the movement during those stages. This is done by summarizing the consistency of price reaching newer highs and lows within a given period of time. If you're interested, you can research further details of this indicator's calculations. The main focus here will be on examining real chart examples. We'll see various uses of the Aroon indicator along with preferred conditions for its application, in cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges. So no matter when you watch this or which charts you choose to apply the Aroon indicator on, information from this series will be of use to you. The Aroon indicator is made up of two parts. Aroon lower, also called Aroon down, is often marked by default with a blue color. It summarizes the consistency of new lows within a given time period. For the bullish part, there's Aroon upper. By default, it's usually marked with an orange line to summarize the consistency of new highs within a given time period. For some, this color scheme is less intuitive, so it could be preferable to change Aroon lower to red and Aroon upper to green, to match more common associations with red being down and bearish and green being up and bullish. Similar to other indicators like the ATR, the default setting with a time range of 14 will usually be left as is, since it's a good balance between the long and short-term context in most timeframes, including the daily timeframe. Aroon upper and the lower can fluctuate between values of 0 and 100. During a stable uptrend, Aroon upper would ideally remain at 50 or higher, and Aroon lower would stay between 50 and 0. As Aroon upper begins to decline, this indicates newer lows are consistently being reached. When it drops below 50, it indicates the start of bullish weakness. In contrast, rising Aroon lower values point to bearish strength and increased selling towards newer lows. When Aroon lower crosses over Aroon upper and the Aroon upper crosses below Aroon lower, it can point to a weakening stage of a strong uptrend, either towards consolidation, retracement, or a full reversal. In this case, since Aroon lower doesn't consistently advance over 50, and Aroon upper quickly gets back over 50, it's been more of a minor retracement towards a consolidation prior towards more neutral to increasingly bearish developments, where Aroon upper goes below 50 and remains there for an extended time, while Aroon lower continues to rise and eventually establishes a solid presence over 50. And that's essentially the exact opposite of what we began with, to mark the conclusive end of the uptrend and a transition to a bearish reversal. At the beginning of this example, we see those familiar movements for strong uptrends where Aroon lower gradually decreases and Aroon upper sharply increases and stays at or near 100, approximately between 70 and 100 for a healthy uptrend to be maintained, while at the same time Aroon lower stays at the 30 to 0 range. As would be expected, a downtrend sees the opposite happen with the Aroon indicator with a sharp increase in Aroon lower, while Aroon upper goes towards the 30 to 0 range. Sharp price drops like this are, of course, less sustainable. Aroon lower can quickly fall under 70 and even go below 50, as selling quickly drops off and newer lows are not consistently being reached. However, since Aroon upper remains at the low ranges as well, there is no major bullish sentiment developing, which is advantageous for the quick resumption of the downtrend developing, right when there's a sharp increase of Aroon lower going back over 50 and eventually staying within the 70 to 100 range to maintain the bearish advantage. Once again, when falling price cannot be maintained indefinitely, Aroon lower begins to decline, except in this case, price moves neutral to bullish with a minor upswing. That is reflected with the Aroon upper line going over the Aroon lower line and nearing values well over 50. After the minor gap down fails to be filled, a bearish continuation is quite natural and is represented quite well with the Aroon lower line going back over 50 and staying within the 70 to 100 range, while the Aroon upper line remains at those lower ranges to indicate a stronger portion of the established downtrend. However, even during stable downtrends, such strong drops are not going to last indefinitely, and there will be some breaks reflected with flat price movement and even minor upswings accompanied with Aroon lower dropping towards 50. While Aroon upper generally remains at those lower ranges from 0 to 30 to point towards a decrease in selling pressure, and not necessarily an increase in bullish sentiment, which would normally require these kinds of characteristics we discussed before. Quite the opposite to the central focus of this example, which highlights how the Aroon indicator can help identify strong bearish movements that develop during various stages of a major downtrend. When a trend pauses, or price is not trending, it would still be extremely rare for price to move completely flat. So there are lots of various combinations price can move during these pauses and non-trending phases. In any case, certain consistent characteristics begin to emerge and they can be identified using the Aroon indicator. Whether there has been an established uptrend or downtrend with price, having both the Aroon upper and the lower lines moving the same direction at the same time usually indicates a pause to a trend and or non-trending movement, such as in this case where there's a pause to the downtrend, while the Aroon upper and the lower lines both move down during a brief period. The phase before that just has the Aroon lower moving down consistently to indicate neutral to bearish movement. Also, usually when price is in a non-trending phase and there's higher volatility, there will be rapid fluctuations and crossovers of the Aroon upper and the lower, usually within quick succession. Given these two primary characteristics during a trend pause and or non-trending movement, it's not too surprising this horizontal range has been sustained for so long. And naturally, once price continues dropping after the initial gap down, we see those familiar characteristics of a strong bearish phase. A non-trending phase in the market that takes a more ambiguous form looks like this, where Aroon upper and Aroon lower remain relatively far apart while making rapid yet minor fluctuations. It's slightly different to the characteristics we covered earlier, where there are minor yet well-defined swing points with some directional bias during the formation of a larger horizontal range. This can be in various combinations where minor upswing or downswings in price within those horizontal ranges can be accompanied by both Aroon lines moving in the same direction, going down or up. Flatter and more indecisive movement can also take place when both Aroon upper and lower values are near one extreme, for example here in the 0 to 30 range. Though usually this kind of occurrence takes place for an even shorter duration, it can but doesn't always take place before a more significant movement on the price chart, either a reversal or continuation that accompanies a crossover of the Aroon upper and lower lines. Sharp swing points can result in drastic changes of Aroon values in relatively short periods of time. That's why it's important to look at the broader context on the chart to better distinguish between minor retracements and full trend reversals. With the current upswing being similar in appearance and size to others that have appeared previously in this established downtrend, one major difference under development is not only the crossover of the Aroon upper over the Aroon lower line, but also its value staying in the upper 30% range, with constant contact on this threshold marked by the support and resistance line at 3770. The ideal scenario would be for Aroon upper to remain within the 70 to 100 range and Aroon lower to remain in the lower 30% range, while at the same time price needs to close over 3770 and rapidly surge higher for a more decisive double bottom reversal to take place. Since a quick jump in price did not take place and there was a drastic shift in Aroon upper dropping and Aroon lower rising, there was a natural tendency for a more minor to moderate trend. A familiar horizontal range began to form centering around the 3770 level. When these characteristics are present, it's not surprising to get a bullish breakout. Now, with price having fallen sharply back into this range, those same characteristics would be preferred for another decisive and quick bullish reversal. Indeed, they do take place, but to a lesser degree for a shorter duration and a smaller rise in price, prior to those familiar neutral to bearish phases. This will be similar to the last example except from a bearish view. We want to practice the identification of more substantial bearish reversals compared to minor bearish retracements. For example here, we don't just want Aroon upper to be decreasing to indicate the drop in bullish advantage. We also want an indication of stronger selling pressure with consistent lows being reached, as represented by the Aroon lower line going above 50, and remaining within that upper 30 range. Here's a brief case of a bearish reversal that doesn't immediately take place due to short-term bullish price action. Then, when volatility increases, a moderate drop takes place, but this is also delayed slightly by indecisive sentiment that's also represented by those familiar characteristics, where Aroon upper and lower move in the same direction. Next is that less common case where both Aroon upper and lower are briefly at one extreme, in this case within the upper 30 range prior to a decisive crossover of the Aroon upper line, dropping well below 50%. While a large short-term drop takes place that naturally maintains Aroon lower at the upper 30 range. The Aroon indicator gives us a good idea that this is a chart establishing into a long-term downtrend, with sections where Aroon lower is well entrenched at values near 100, while Aroon upper is consistently close to 0. Volatility and more indecisive movement becomes more clear when both lines of the indicator move in the same direction. Also, it can be said there's short-term bullish volatility when Aroon upper and Aroon lower cross each other more often, resulting in short periods where Aroon upper is close to 100. From a bearish perspective, this is exactly what we want to see in terms of maintaining the larger downtrend, with the Aroon lower line surging to those upper values and plateauing near 100. while Aroon upper consistently falls to indicate clear dominance on the sell side to keep price down in the near absence of any buying pressure, which explains how the initial drop can be maintained, even though red selling volume doesn't stay at exceedingly high levels during these smooth drops within the larger downtrend. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.